Hi there, I'm Mike, and I'm going to go over the investing strategy that I use, which is called Automatic Investment Management by a man named Robert Lichello. A number of people have asked me about this on StockTwits and some other places, so I'm going to go over it briefly and give you a general introduction to it. And I have to say, I've been trading probably for about 8 years now, and I've tried just about every system there is out there, every different kind of strategy, an indicator, and collection thereof. And while I certainly had some wins, I never really met with success. At best, I think I broke even over time, which, of course, is not what you want to do when you're investing. You want to make money. And a number of years ago, I happened across this system, this book by Robert Lichello, and starting last year, I actually started putting it into practice. And I'm going to show you the book first of all. I'm going to warn you that the title is pretty outrageous. How to Make $1 Million in the Stock Market Automatically. So Lichello wrote this book back in the 70s, and he was, like millions of other people, he was a victim of some of the stock market crashes in that period, and I think just about everybody has seen what can happen with the market. But he came up with a system that is math based. It's not some secret squirrel indicator that if other people find out about it's not going to work anymore. He really kind of codified, using very simple math, a system that really literally buys low and sells high, because a lot of the current philosophy in the market for a lot of people is that you want to buy into strength and then sell whenever things start going to pieces, but you really want to reverse that, right? You want to buy things that you want at a discount, and then you want to sell it at a premium, and that's what AIM does for you. So this is the book, and I strongly recommend that you get this. Again, it's the title is outrageous, but it really works, and I'm going to show you some evidence of that. Since I implemented the system, taking Lichello's Automatic Investment Management, or AIM system, and adding a few tweaks to it using tools that weren't really available in his time back in the 70s. This is the profit and loss on our portfolio since last April, 10 April 2020 through, I guess what was yesterday, 5 March of 2021. Now you can see over in late February and March, the market started going down. But of course, if you look back in October of 2020, there was a similar decline, and then also back in August, and even going back into June in the portfolio here. So roughly 50 to 60% pullbacks. But then look what happened after those pullbacks. AIM, spins off cash by selling shares as price rises, and then it has you save that cash and then starts buying discounted shares after prices fallen considerably, and then of course you leverage the market from there, and this is the result. So this is real. This is based on our current account. These numbers aren't made up. So I wanted to, let's see, I'm going to go back. Stand by just a moment. So this shows the essence of his calculator. And I'm not going to dwell on this too much because I really strongly encourage you to read the book. But I just wanted to show some of the columns and values that are going to show up on the spreadsheet, which is available for you to use, again, at your own risk, caveat out there. But basically, his original system had you buying, taking however much money you had, and buying half stock, keeping half in cash in case the price dropped, so you could buy discounted shares. The safe is basically to ensure that the stock moves enough that you're going to sell at a good premium or buy at a good discount. And then portfolio control this is a mechanism that he uses to help manage how much it's buying as it goes up and down. And then a calculation amongst those factors results in the buy or sell advice. And there's another little filter that you don't see on here that's applied that then results in a market order, which isn't displayed here, but that tells you how much money to spend either buying or selling stocks. And then, of course, the portfolio value, updating your current portfolio value. So let's pop over to the spreadsheet here. Now, this is a copy of the spreadsheet that I have, and again, I'll make this available for folks who want to use it. So you see some of the same things in here. Now, I have this set up for each stock. Lichello originally intended this to be used on a basket of stocks, or on something like a exchange traded fund or money market fund or something like that. But again, one of the tweaks that I've added to the system is that, you know, I have a name calculator for each of the stocks that I have a position in. But in this case, we have, you know, the stock price and the shares held, which generates the stock value, right? Just multiply that. Any cash that you add, and the cash value, and then the safe, which is typically a 10% of the stock value. Then the portfolio control, which is originally set for the stock value. And then these other just, you know, placeholders here. So what this does in this case, so let's say we start out with the stock price at $10 and it rises to 15, so that's a 50% increase. So if you look over here, AIM says, hey, you need to sell because price has gone up considerably. And price goes up to $20 and it has you sell some more. Well, then let's say that the stock takes a huge hit, okay, and it drops 50% to $10. Well, AIM wants you to start buying, right? And then let's say it drops more, it drops to 5. Well, AIM wants you to buy even more. Look how much it goes up from 36 shares it wants you to buy to 133. And then you can see how much the market order is. And then also that adjusts the cash value. Of course, as you're buying shares, your cash is decreasing. So then let's say the market bottomed out at 5 and then it goes back up to 10. Well, AIM is having you sell a ton of shares. Goes back up to 15, goes back up to 20, and it's having you sell all the way up. And then back down to 10, and then it's having you start to buy. Now the interesting thing is, look at how many shares you started with, 100 shares, because we just set this for $1,000 at $10 a share. So the number of shares is adjusted as you buy and sell. But when you get down here, even though the stock price is now $5, so it's half, you know, it's a 50% loss over the original price of 10, you now are holding 143 shares, so you're holding more than you were whenever you started. And if you zoom over here to the right, you can find that your profit and loss, which is calculated just, you know, on your essentially basically what you gained over your original $2,000 investment here, $1,000 in stock and $1,000 in cash. Well, the only time this dipped down to below break even was here whenever it went down to $5 the first time. Now it's gone back down to $5 again, but you're sitting at 84% profit, and you have almost half as many shares, shares as you started with. So that's really the power of AIM, and as these cycles, as these buy and sell waves continue, they amplify. Lichello's system really works, and you don't have to know any indicators. You don't have to know you don't have to be a stock market guru. You don't have to know tons about fundamentals and things like that, although you have to, you know, there are things that I'll show you to help you choose stocks that'll work well with AIM. But this is something that anyone can use. You don't have to be a technical genius, and you also don't have to have a lot of money. One of our boys is starting to use this system, and he just started it, but he only started with, you know, roughly $300 in stock. So, and with now that most brokerages have commission-free trading, you don't really have to worry about that. So you can start with just a few $100s and get going. So I just wanted to leave you with this for the intro piece, that AIM is not a get-rich-quick scheme. All right, it's not going to make you $1 million overnight. But if you use it religiously and you use it properly, the way I'm going to show you, it will make you money. The only way that you can't make money with AIM is if the stocks that you use, like all of them, the price collapses beyond the point of redemption, or they completely lose volatility, which is making swings up and down, or the company goes bankrupt. But over the mid to long term, AIM will make you money. And again, it's been working for me, so I wanted to share it with other folks. I'm going to wrap this up by saying that AIM will work. It will work if you use stocks that are very, very frisky, very volatile, and I will lead you through how to choose stocks that work well with it. It's not a get-rich-quick scheme. It is a get-rich-for-certain scheme if you use it the way Lichello implemented it. And I like to think that the tweaks that I've added to it, which I'll go over in subsequent videos, have even made it even a bit better. So I'm going to leave you with that. And again, I strongly encourage you to get the book and read the book. I'll have a link for that in the comments or in the description section. And if you have any questions, please let me know in the comments. And please like and subscribe the video to the channel if you like this video. And I will be posting another one here fairly soon. Thank you.